Yes, sir. It's your boy B Hayes. We back with another one, guys. Before we get into it, let's give this video a thumbs up. If you're new around here, you already know what to do. As you guys can see, your boy is in Walmart with it. So let's go ahead and take a look at this, guys. This is unbelievable. Everybody knows the market circumstances right now. The economy is all jacked up. They putting all type of fear right here. They printed all this money. Now inflation has gone through the roof, and now on top of that, interest rates is sky high, and they're still not done hiking them. So with that being said, guys, this stock in particular, put it on your watch list. It's a very risky stock, but the rewards and the rewards to risk ratio is very, very good, guys, and that's what I'll be looking for in the markets. So put this on your radar, come up with a decent plan. I'm going to let you guys know exactly what my plans are for this stock, and know just because we getting into a stock, I already have the plan, I already have the mindset of defense. Don't think, oh, money, I'm about to make money, I'm ready to make money. I'm already getting into this stock with the thoughts of defense. I'm playing defense, like I already lost my money. You get what I'm saying? So just be, have the right mindset being involved in the stock market. A lot of people, not to get off subject, but just to throw this out there, a lot of people get in and whatever opportunity they see, they automatically think how much money they gonna make. No, I first come out of the clear thinking how much money can I lose. So get your mindset right, people. But anyways, the stock, not the stock, but what I was saying, back to the economy and what's going on in the markets. We know the markets has been tumbling, coming down hard. Individual companies, individual securities are already down over 60, 40, 30% from its highs, guys. And this stock in particular, what I'm talking about, from its all-time high back in 2021 of $390, $400 a share, it's already down 100, 200% from its all-time high, guys. And then just a month ago, on March the 2nd, 2022, this stock was just trading at $157 per share, guys. So this is insane, the amount of downside this stock has taken, and I believe the upside is there, guys. And not saying I'm going to stick around for this thing to fully recover or get anywhere near recovering. I'm just here to take advantage of the meat of the move, guys. Taking advantage of the meat of the move is when the stock drops so hard and so severely in price, regardless of what's going on. It don't always work like this though, guys, because the news could be bad. Sometimes that stock will keep trending down, follow knife, keep falling down, and never recover, never get back up, stay down at those levels for years. But in certain situations, whenever the news is not that bad, whenever the numbers is not that far off, and we'll get into the numbers, this situation is where you could take advantage of the meat of the move when the stock is well oversold, even though people overreacted to the news. So anyways, guys, let's go ahead and take a look at this. This stock in particular is Upstart, guys. That's ticker symbol UPST. You most definitely want to put Upstart in your watch list, on your radar. I got it on mine. I will let you guys know my plan, how I plan to do this towards the end of the video. So Upstart shares tanked. It tanked over 60% on Tuesday, guys. 60% just today. And it's already down. It already was down before it made this big move. After the artificial intelligence driven lending platform cut its full year revenue outlook, signaling a drop in demand for loans as interest rates rise. So for the ones that don't know exactly what Upstart is a lending program. They lend out money, they give people loans, and they basically made it more easier and more accessible to the poor, the working class, to get more loans more easier. But the catch is in how Upstart is making so much money is the fact that Upstart is giving people these loans because they know they're gonna kill them on the back end. They're gonna have these people pay 28%, 30%, 40% in interest on the money that they borrowed. So if you borrow $10,000 from Upstart, you can look to pay anywhere between $2,800, $4,000, maybe even $5,000 back on that loan, guys, on top of the $10,000. So you'll pay back $13,000, $15,000, $16,000 altogether. So that's insane. So anyways, guys, why they lost money, why the stock dropped like this? The reason this happened is because we go all the way back to the feds. We know the feds printed all this money, which caused inflation. Once inflation went straight through the roof, what's going to happen next? Interest rates come. interest hikes come. When interest hikes come, and we even got more coming, this put this type of stock into fear mode, because people is not going to be taking out the same amount of loans they was taking out previously when interest rates was down. So interest rates so higher now, people is, it's putting this stock at fear, putting these owners in fear that people is not going to be coming wanting loans often like they were before, guys. So that's the main reason why this stock is tanking the way it is. So my thing is, this is a great investment if you play with house money, meaning you get in now a lot of cheap shares, and once it run up a few bucks, $5, $10, $15, $20 a share, which it could easily do, but I wouldn't wait for that. Don't be greedy. That's how people get caught. The smaller the better. But anyways, you get in, you get out, get your original investment out, plus pay yourself profits for getting in so early, and then let the rest of your shares ride, because this company is they came all the way back down to its starting point, to where when it first got on the market exchange of what it was trading at. And that's a gem, guys. People watch this stock go from from $30, $40 all the way up to $400 per share. So you most definitely want to have this on your watch list, guys. And like I told you guys, I now be telling you guys how I will be playing this personally. I will be looking to enter Upstart right here in the $30 range. Anything under 30 is most definitely a go. So I'll be looking to accumulate, add my position at these levels as this thing pop back up to around $38, $39, $40. I'll be looking to exit my position, guys. So I know it's not much on a share price, and a lot of people may say, well, it got way more upside it could go. I'm not here for that, guys. I'm just here for the meat of the move. You see the bad news that it just got, but the news isn't as bad as people think, though. They still is going to be able to, the numbers is very close. Let me go ahead and take a look. Let's take a look at it, guys. So growth concerns fueled by Russia-Ukraine war, as well as aggressive monetary policy tightening to combat inflation, has pushed up the average loan price on Upstart's platform by more than 300 basis points since October. The company said on its conference call, Upstart, which makes most of its money from fees paid by banks using this platform, lowered the annual revenue target. They lowered its annual revenue target, how much they plan to make on this year, to $1.2 billion, $1.25 billion from $1.4 billion, guys, earlier, as it expects loans volumes to take a hit this year. And from my perspective, I think, they still in the B's. They gonna lose over, I want to say they're gonna lose, a few hundred M's. That's right near, if I do the calculations, 200, they're going to lose right around 18% of revenue of what they would have got. And that's, we can take that in consideration. We knew this was coming. They knew this was coming. They knew it was coming. So with that being said, guys, I do believe they could, see a way out with this, meaning a lot of people still is going to take loans, being for the fact that poor is going to be getting poorer during these times and rich is going to be getting richer. So whether the poor people pay these loans back or not, they is definitely going to still be needing loans. People is just not, so eagerly ready to do that, knowing what's going on behind the scenes, knowing interest rates, knowing people is trying to get, take more from them. So they is trying to do everything in their power not to do so. But this is just the start of this. This is going to be, prices is going to be at these levels for a while, until they able to tame interest rates to help tame inflation. So prices is going to be up, guys, and people is going to, they're going to have to adjust, and they're going to go with what they know, and they're going to most definitely still be taking out loans, guys. So that's not to tell you guys to, hold this play, get in this play and hold it forever, because like I told you guys, this is just an in, get out. And if you got some shares left that you want to let ride, you can let them ride on house money, guys. But this the play I'm looking at. This the